Very good morning to all of you. I am Veena, Secretary FTCCI. I welcome you all to today's webinar on acquiring of a company in Insolvency and Bankruptcy Code 2016, Procedure, Care and Caution. We are honored today to have with us on virtual dais Sri Nipun Singhviji, a practicing advocate, chartered accountant, and an expert in corporate, commercial, and insolvency laws. So, welcome you, sir, to the webinar, and thank you so much for taking the time to interact with the August gathering on this very important topic, sir. Here, I would like to recognize the presence of Sri Meela Jaydev Garu, Vice President, FTCCI, Chair CA Naresh Chandragelli Garu, Corporate Laws and IBC Committee, CA Ritesh Mittalji, Co-Chair, Corporate Laws and IBC Committee, V.S. Rajagaru, Advisor, Corporate Laws and IBC Committee, and Mrs. Kathy Naravane, she is on the virtual desk. So, before beginning the session, I would like to show a short film of FTCCI for information of our non-members. Non-members. Venkatesh.
The largest business organization of Telangana state. With a legacy of excellence, the voice of the industry, representing the interests of 25,000 businesses of all sizes, sectors and regions. Empowering trade through advocacy, solution and standard setting. Opening new avenues for unprecedented growth. Laying the foundation for an industrial transformation in the state of Telangana. Now, poised for the next century and beyond. The Federation of Telangana Chambers of Commerce and Industry, FTCCI. Together, let's rewrite the vision for a progressive future.
Thank you, Venkatesh. I request our Vice President, Mr. Meela Jaydev Garu, to deliver his welcome address.
Very good morning to all, sir. Ladies and gentlemen, very good morning to all of you.
Good morning.
I'm delighted. Welcome to all today's webinar, acquiring a company in IBC 2016. Care and caution, which is very important topic as a business needs existing company, and in such situations, the process will be beneficial. A special welcome to today's keynote speaker, Sri Nipun Singhviji, Managing Partner, NSA Legal, Ahmedabad from Gujarat, participating advocate and chartered accountants. As you all are aware, in the background of the pandemic, digital economic forces have suffocated a number of industries in the country. However, several relief measures have been introduced to curb the financial losses, and few new monetary resources for the strengthening the weakening industries. Furthermore, the backdrop of COVID under IBC regime, efforts have been made to resolve the NPA issues by the giving considerable relaxations to the new acquirers, of the deferring the companies to create the smooth environment to deal with the challenges of the create value for the nation as well as the new acquirers. In the background, today's webinar planned to provide the prospective investor with the process of the procedure to the IBC, like submitting resolution plan, etc., to the care of caution taken the smooth acquisition by the company. I don't want to take much time, Sri, as Sri Nipun Singhvi participating advocate, a chartered accountant who has delivered 1,500 lectures on various laws. We'll give the elaborate presentation of the to be followed query of a company in a IBC. It is good opportunity for the participants to take advantage of presence of Sri Nipunji carefully, and doubts you are having anything, you can please mention in the chat box. After the completion of the total one by one, he will give the reply to all. I hope participants will have fruitful interaction on the subject, and thank you very much to all. Thank you, madam.
Thank you.
Thank you, sir. Now I request State Corporate Laws and IBC Committee, CA Naresh Chandrigal garu to deliver his introductory remarks. Sir, over to you, sir.
Yeah. Good morning to all the members who are participating. Respected Chief Guest, keynote speaker of the day, Advocate and Chartered Accountant, Sri Nipun Singhvi, Advisor Rajgaru, Co-Chair Ritesh Mittal, and all the delegates were and Vice President Meela Jaydev Garu, and all the members who are participating. Good morning, ladies and gentlemen. I'm delighted to add my words to welcome you all to today's webinar on acquiring a company in insolvency and bankruptcy court procedure, care and caution. My special welcome to today's keynote speaker, Sri Nipun Singhvi, who has consented to share his knowledge and experience to this August gathering on today's important topic of acquiring a company in IBC. A lot of members, I'm sure, would be aware how to create a company under Companies Act, which is a brand new company. But in terms of acquiring a company under IBC is a definitely new aspect of it. And I'm sure today's speaker will definitely enrich us in that process. So the Corporate Laws and IBC Committee is actively involved in discussing and debating around various issues relating to corporate laws, insolvency and bankruptcy, and has undertaken several initiatives in this area, along with the government and various agencies, by suggesting policies and regulatory changes to address to these issues and acts as a bridge between policymaker and regulator and industry participants for development of business in India. To get awareness among the stakeholders on the process of acquiring a company under IBC, the CILBC Committee of FTCCI has planned today's webinar. When acquisition occurs, the acquirer doesn't just get a large market share, but also obtain all of the company resources. I feel that rather than building a new brand or product for a group, from the ground up, if we acquire a company, the target company provides already available capabilities. I would like to mention here that IBC has created a significant potential for investments to acquire distressed companies. However, one of the biggest challenges for potentially acquirers under IBC, it has the history of legacy issues which may linger on the post-acquisition, deterring potential acquirers, as it would attach significant financial and criminal liabilities on the acquirer's acquisition of the targeted company under IBC. Acquiring a company is a difficult process with many laws for regulators. Hence, one should know how to navigate those laws and avoid making mistakes. I don't want to go in details of this topic, as the keynote speaker will provide us with the valuable inputs to achieve these business synergies for acquiring a company. I would welcome all the members once again, and also welcome the speaker of the day, CA Nipun Singhvi. And I'm sure it would be a very interesting session for all of us to understand and see what is the potentiality for a business in having a synergy of acquiring a company. So thank you very much for giving me this opportunity.
Thank you, sir. Now I request Co-Chair Corporate Laws and IBC Committee, Mr. Ritesh to introduce today's keynote speaker, Mr. Nipun Singhvi, to the audience.
Good morning, everyone. It is my indeed pleasure to introduce Nipun Singhvi to August gathering. Friends, before I introduce him formally, he is one person wherein he is like moving Barak for IBC case studies. as far as I understand, like daily around 3 to 4 hours, he'll be on the case studies only. He'll be reading. So any issues which comes to case studies, he is the best person in the entire country when it comes to. And now I'll introduce Nipun Singhvi to the August gathering. Uh, though he has written firstly as a practicing advocate, we recognize him as more as a sacred.
I think some audio issues, sir.
Yeah.
You are able to hear me? Yeah. Delivered more than 1,500 lectures on various laws, regular faculty at ICAI, ICSI, Nationalized Bank, CAG, trade associations, etc., and regular author of various corporates and tax journals, majorly in taxations, corporate professionals, Economic Times, Tax Guru, Tax Scans, Live Law, IBClaws.com. Experts on corporate, commercial and insolvency laws, advised and handled insolvency cases having debt worth more than 1 lakh crores. And important cases includes JP Infrastructure, Lanco Infra, SR Steel, SR Oil, SR Shipping, Reliance Naval and Energy Engineering Limited, Gujarat Ambuja Exports Limited, Syntex Industries Limited, ABC Shipyard Limited, Big Jam Limited, Today's Writing and Gopala Polyplast Limited. He's a financial activities, social activities, and RT activists. Few of his financial activities are PI in public interest, some significant. He has filed numerous PI in public interest, some significant includes demonetization, budget 2017, tribunal members appointment, NCLT composition 2018, advance authority ruling AAR and AAAR, and National GST Tribunal Constitution. Indo-Korean Steel Customs Duty Evasion issue in 2018, extension of IT returns due date in 2020, extension of CFSS scheme due date in 2020. With respect to social activities, he has been representing in PIL on social causes, unfortunate Surat fire accident in 2019, removal of caste in OBC list and formation of permanent commission NCBC in 2018, parking fee charged illegally in 2019, food prices to be allowed in multiplexes 2018, formation of policy in towing of vehicles in 2019, RERA Appellate Tribunal, appointment of technical member and permanent member in 2019, coronavirus, deferment of hearings before RERA and Tribunal in 2020, COVID relaxation to builders in 2020, and waiver of school fees during COVID in Gujarat in 2020. As an RTI activities, disclosure of willful defaulters by SBI for the first time, RERA Tribunal appointment, NCLT members appointment without approval of Ministry of Law, listed PSUs appointment of independent directors, unearthing force of penalties paid to BSc and NSC. With this brief introduction, I request our speaker, Nipun Singhvi, to present his paper. Over to Nipun.
Thank you so much, Ritesh ji. It was a very elaborate introduction. Thank you very much. Thank you, Naresh ji, for inviting me here. Thank you so much, sir. Thank you, Raju ji. Thank you, Veena ma'am. It's indeed a pleasure to come again before FTCCI. In fact, in the COVID time, we had done seminars, and it was a very pleasure learning for me. And I'm happy to see that 180 registrations have been done for today's webinar. Sorry for the sore throat, because yesterday, complete day, I was training the banking officials. So it was like after court, the throat went down. So I'm a bit sorry for that. In fact, today, Ritesh ji have put me in great difficulty. I was working late night to prepare the presentation because he has touched upon the most tricky subject in the country. It is basically the learnings from postmortem, which a doctor will do when he is trying to treat a patient. So basically what he has said is what care and caution we should do while doing the procedure for acquisition of company. So I had to think it from the other angle, that how if a company is acquired and the problems are faced, how a company at the time of acquisition should have taken those things into consideration. So it was a bit tiring for me for collating everything from another point of view. Normally I go and speak on the either in the professional forum that how you should do it, or from the business forum that how a promoter can get it. But this is something very different, a futuristic perspective from how a company should be acquired, and after acquiring there should not be a problem. It's like deciding how would I get a wife. So it's very difficult, because whatever you think, it's never the case. We all know that. And that's how this particular topic would be very interesting. So I try to capture some of the qualities which should be there for the prospective, I would say, bride, though the acquiring is not a groom, because he might say that this particular quality is not there. Therefore, I would like to run away from this marriage. So something like that. So with this, I would just like to share the presentation. Sir, I hope it is visible.
Yeah.
Yes, sir.
Okay, great. So the complete presentation, what I have tried to do is what a resolution applicant, that's the buyer, because we have many persons from business industry who are going to listen to this particular presentation. So I've tried to make it as simplistic as possible. So the person who is acquiring is technically called a resolution applicant. So I would be discussing how a resolution applicant, on what parameters he has to basically examine that, yes, these all things should be there. And from the perspective of resolution professional, because we all have professionals here, how a resolution professional or a professional advising the resolution applicant should take into consideration some of the issues. Because ultimately, when you are paying a price for buying a company, it should be worth it. So ultimately, this exercise is how we can be worth finding a particular company and whatever benefits we want to take it. So basically, from the perspective of resolution applicant, what is required to be seen is that if I buy out the company, whether the worth of that company, what I am paying the price, is appropriately paid, or whether after buying, I will have to pay more amount to actually make it workable. So this is somewhat, I would like to take example of Ruchi Soya. So it was obviously a loss-making company. We all know that there were bids by Adani Wilmar Group, bids by our Baba Ramdev ji, Patanjali, and it went for a lesser price to Patanjali. But after that, you see the market cap increase. I don't know the exact figures, but what I understand from the market, it is 6,000, 7,000% jump in the valuation. So whether this particular valuation was not known to the promoters or to the bankers beforehand, no, the person who is acquiring actually makes a change. Just like in case of, we can see the biggest matter of SR Steel, the steel industry completely now has a biggest player, that's the Mittal Group. Because sometimes the companies are not only acquired for the balance sheet, they are not acquired for the assets being reflected in the balance sheet, but they are acquired for something more, something which is not in the balance sheet. It could be making a dominant presence in the market. So therefore, suppose a big player is going to acquire a small player, what may be required to be considered is how is he going to fund it. Like Ruchi Soya example I was giving you, State Bank of India, which was already the lender to the existing promoters, to the existing management of Ruchi Soya, actually funded Patanjali also to acquire it. So basically, source of funds, sometimes the same banker may lend money to a new person, to a new resolution applicant, but probably may not have faith or trust in the existing promoter. So that is also possible. That source of funds can also be seen from the angle of person who is acquiring. So I'm talking this from the all point of view. The person who is going to buy will have to prove his credentials, that how he is going to acquire the company, from where he is going to bring the funds. As far as fund structure is concerned, my professional brothers are here. We all know that how different mix and match can be there. It could be a mix and match of debt and equity. It could be a mix and match of paying upfront cash, some payment in debt, and some payment in equity. This could be that if I'm going to get a listed company, a company which I'm going to buy and get it listed again, I can also tell the financiers or the persons who are going to fund me that this much be the number of shares which I am going to allot you. So such type of permutation and combination can be matched because the credential of the acquiring company is very important rather than the target company, because there are varying judgments, varying case studies. For example, in case of Videocon, when Vedanta bought it, the shares gone away from our demat accounts because they are paying nothing to the person who are existing shareholder. They are giving zero. But if you see Alok Industries case, when Reliance bought Alok Industries, they reduced the price from, I think, 100 rupees to 10 rupees, so 1/10. So there could be equity shareholders who might get continued and get something. It could be a strategy. We don't know. Maybe, probably, there could be a strategy of Reliance that continuing Alok Industries equity shares, I am getting a more bigger shareholder base. And this particular thing, or I would say concept, they have not applied in case of acquisition of Syntex Industries. Though the plan is yet to be approved, but as far as the public documents are concerned, they have already disclosed that they are going to pay nothing to the shareholders. So this particular issue, what is the concept of the person who is going to buy the company, whether he wants his company to continue to be listed, whether he wants that company should be delisted, whether it is to be continued as a private limited or a public limited, it entirely depends on the concept from which the person is acquiring the company. So this is very important that these things should be considered. A company which is listed is acquiring a listed company. Then my suggestion or my point of view experience is that that person should continue the company which is under insolvency to be listed, because if he continues, he gets an additional shareholder base, additional presence without going through the tedious task of bringing an IPO or an FPO. So that is a shortcut, I would say, that yes, you have acquired a company without wasting a single penny to actually get your company listed. And once you are listed, you have a number of benefits, whether it is at a cheaper price, you are getting money from the banks, whether it is possible that the concept of repayment or the concept of future projection has to be considered by the resolution applicant. If we are advisor to an RA, or if we are an RA, the person who is going to buy the company, resolution applicant, we can think from the projections of 5 years, 10 years, maybe 15 years, we don't know. But that projection is very important, and whether market presence is required or not. So these are some of the factors which I think are very important. Then some of the reliefs and concessions I've tried to discuss, which are majorly important. Some of them are carry forward of losses and all. So we will discuss them one by one. Another sticky issue which we will discuss today is regard enforcement directorate attachment, because most of the companies, I have seen that wherever there is a huge siphoning of money, or probably some of the cases which I am also appearing, some of the promoters are sitting outside India, those infamous jewelry cases where the promoters are not traceable. We don't know what is the worth of asset. For example, for instance, we don't know that this particular, maybe a gold, maybe a diamond, we don't know what is the valuation, whether it is 1 crore, 1 lakh or 100 crores, because the calculation or the valuation is something very, very deceptive. Until and unless the person acquiring belongs to that industry, it becomes very difficult. Secondly, the tangle between the enforcement directorate and the IBC. So I will throw some light on it, though the matter ultimately is sub judice before Supreme Court, but my views I would express on ED versus IBC. So these are some of the requirements of IB code, which as a resolution applicant, you need to put it in the resolution plan. So where it could be one of the case I have seen where the person who is going to acquire the company, let's say there are two types of undertaking in the company. When I'm using the word undertaking, it means there could be possibly two verticals. Let's say one is a textile vertical, one is a chemical business. So the person who is acquiring, let's say he is into the chemical business, so he would continue only the chemical undertaking and probably might sell out the textile business. So the resolution plan can envisage a figure based on the sale of assets, a part of sale of the assets after acquisition and getting money and paying to the creditors. So it is possible that when we acquire a company, there could be multiple businesses. Some of the businesses may be continued. Some of the businesses can be sold out. Now, this is a myth, I would say. Most of the people get confused here that if I am buying a company, the company as a going concern. See, you are running a company as a going concern, but there is no requirement in the law that all the businesses should be run as a going concern. We can always hive off some businesses and continue other businesses. So that is always a possibility and it can be done like this. So a part of the assets could be sold, it could be transferred, there could be multiple divisions. Also, I have seen recently, I'm advising a case where I've seen that there were two particular different businesses and the acquiring company also has those two different businesses. But again, the acquisition by one company getting those two units was not viable because the ultimate capacity and lookout for one vertical is different from the another. So what they did in the resolution plan is they hived off one division and merged it with another company, and they acquired one company and merged it with their existing division of one company. So for example, let's say I am into the business of steel and textile, and I am acquiring a company which has both the verticals. So I am going to hive off one of them and merge it into another company. So let's say steel is demerged and merged into my steel making company, and textile business is amalgamated with another existing company. So a permutation and combination of demerger, merger, amalgamation, all this is possible. In fact, the law permits that by way of resolution plan, you can plan merger and acquisition. Merger and acquisition can be done easily in one shot by the resolution plan. And why this is more important is there is already a MCA notification guidance that you need not get the approval of the shareholders. So that is something very important which can be used to the benefit of the corporates, that you need not go to shareholders for approval and you can do this very easily, giving a synergy. Otherwise, what was happening? You first acquire a company, then do the demerger, then do the amalgamation. This all process might take another 1 year after acquisition. So this is something you can do it in the resolution plan. So this is something which you can think of. Then I've already told some of the views taken by the corporates are to continue listing or to make delisting of the shares. So I've already given you some examples like that of Alok Industries where the shares were continued, though the face value was reduced. Case of this Videocon where Vedanta acquired and shares have been zeroed. Similarly, in the case of DHFL, nothing was there for the shareholder. So such type of things can also happen. It ultimately depends on the acquiring company that how they are going to continue the target company. Then another important issue, and I have seen this problem is that the person who is acquiring the company is not able to actually work because of the existing charges of the lenders. See, the law is very clear that once you acquire, all the claims become zero. But some of the lenders or some of the creditors who had created charges on the company, when I am using the word charges, I mean they have actually got some security interest registered, maybe with any authorities. It could be with ROC, it could be with CERSAI. Now, those charges ultimately should be zeroed when you are buying the company. So that particular clause, my suggestion to all the acquiring companies is, please put a clause in the resolution plan specifically saying that these charges are going to be satisfied and they are going to issue NOC or a nil certificate, whatever you call it, because different terminologies are used for different banks, whatever you say, but that charges should be satisfied. Interesting case came before me, and I think it's a NCLT Chennai judgment, where in the resolution plan, they prayed for correcting their CIBIL, the acquisition of the company. If the CIBIL is not actually appropriately corrected, you cannot make further lending. You cannot go to banks and ask for money. Therefore, in a corollary to satisfaction of the charge, my suggestion now to you all is that the CIBIL score should also be appropriately corrected by the lenders after we acquire the company. So those all old write-offs, bad debts and everything of that company being shown in the CIBIL. CIBIL, as we all know, there's a score of the credit companies which is maintained for the purpose of banks giving loan. They see your CIBIL score. So if I am acquiring, let's say I am acquiring a company called Videocon, and the Videocon CIBIL score is bad, nobody will give future lending even if I acquire it. So as per law, their claims are zero. Same thing should consequently also flow down to CIBIL. Though it's a consequential effect, it's a very logical argument, but then putting it in the plan will rest all your otherwise aberration after post-acquisition. Then some of the time you might require that change of board of director, change of shareholder, all these things with regard to reduction of share capital, cancellation of share capital, or further issue of shares. My suggestion is put all those things in the resolution plan so that there is no non-cooperation. I've come across cases where the company is acquired, but the board of directors of the previous management are not cooperating because the corresponding things have not changed in the Companies Act. So under IBC, Mr. X goes away, Mr. Y comes in. But that Mr. Y coming in is not captured in the Companies Act. So therefore, you please write in the resolution plan that this particular constitution, management, control is going to change in so and so fashion. So once the plan is approved, you can immediately use that plan and give effect to. I have seen people writing in a very vague manner that we would change, bring out our 3 directors. See, when you are putting a plan, it's better to put that Mr. XYZ are going to come and Mr. ABC who are existing will go away. So that's very important to capture these things in our resolution plan. Obtaining of approvals from central or state government. So this is very interesting issue. And I would say there are contradictory judgments on this particular issue. Let me take an example of a real estate company. Suppose I am acquiring a real estate company where the projects are not completed, or midway they are left. Now the company goes under insolvency and I am buying the company under IBC. Now, if I am not taking RERA into consideration or approval of the RERA authorities, I am going to be in trouble, because insolvency law has an overriding effect only when there is a contradiction between IBC and other law. People misinterpret this overriding effect, assuming that I can bypass the other law. I cannot bypass the other law. If there is a regulatory authority, I will have to definitely take approval. Another case which comes to my mind is with regard to the Binani cement, wherein the Dalmia cement was the first, I would say, successful bidder, did not take approval of Competition Commission of India. And that was one of the reasons why the plan got rejected. It did not got approval, and Ultratech Cement took the approval from CCI. So if there is a controlling or a regulatory authority, approval from that authority is required. Now, let's say I'm acquiring Jet Airways, where all the aircrafts are grounded. If I have not taken approval of the DGCA, or I have not taken approval of the relevant regulatory authority of countries in which I am going to operate, where my aircrafts are standing, then I will be in trouble. So you need to take a prior approval when you are making a resolution plan. So for example, in case of real estate, go for RERA approval, share the copy. My suggestion to all professionals is that you try to make that regulatory authority also as a party. If you make them party, you serve them a copy, whether they come to court or not, at least we can argue that yes, we have already informed them. Because sometimes some of the authorities even do not respond. Central government or state government authority, or maybe sometimes local authority, do not respond to our communications. But when you make them a party before the court and you press upon the court that, sir, please issue notices so that there is not a non-compliance of the law, I think that is a valid argument and it might sustain till Supreme Court. Now, interestingly, just 2 weeks back, there was a case where it was, I think, real estate company where the land was leased by Noida Authority. Now, Noida Authority gives the land on lease to the corporate debtor, to the company. Company goes under insolvency and somebody buys the company. Now, the question comes whether the charges are asked by the authority will be charges which have to be paid, or they will rank as per waterfall of section 53. So if those charges are operational debt and probably the money is getting over at the third or fourth level till the financial creditors level, then as an operational creditor, they are getting nothing. So in this particular case, Noida Authority argued before Supreme Court saying that since we have leased the land, we are financial creditor and our dues should be paid. Supreme Court held very categorically and in more than 100 pages judgment that Noida Authority is an operational creditor because the lease given is an operational lease. My chartered accountant friends are aware about operational and financial lease. Those who are not aware as a participants, there are two concepts as per Indian accounting standard. The lease can be a financial lease and an operating lease. Now, this operating and financial lease is based on some parameters defined in the accounting standard. So I'm not going on to the parameters, but what I am saying is, if as per accounting standards, it's a financial lease, then they will have to be paid as a financial creditor. However, in this particular case, Noida Authority was adjudicated as an operational creditor and they did not get any payment. And that was something which is very interesting because the authority is asking for lease rent. They are not getting it, but they will have to continue the lease because the person buying the company is going to use that particular land. So this is a very interesting judgment. Professionals who are interested can read it. It's a very interesting judgment. Just 2 weeks back it came. Then this, some of the issues I have just highlighted it, but I will discuss it in detail in the further slide. One is with regard to the distribution, how the distribution of money should happen in the COC. Another is liquidation and fair value, how this value, if there is a difference, who will get preference. So I'm going to deal with each and every question in the further slide. So this is just for summary that we are going to discuss all this. So I'm now coming on to the main issues. Then we will go back to the questions. If there are left any, then we will take it one by one. So one is with regard to forensic audit. So what is forensic audit? So professionals would be aware, but for those who are non-professionals, there are 4 categories of transactions under IBC. We call it PUF transactions. So preferential, undervalued, fraudulent, or extortionate. So in these 4 categories of transactions, insolvency professional normally does an audit, come out with that these transactions were done to defraud the company, and these transactions should be reversed back to the company. So suppose the money has been taken away by the promoters, or maybe the promoter's relative or related party, then that money can be brought back to the company. Suppose they have done a transaction with a third party. Let's say they had a stock which was worth, let's say 50 crores. They have sold it at 30 crores. So it's an undervalued transaction. So that difference of 20 crore can be demanded from that person who has taken the goods, or it can be directed by the court that that goods may be restored back to the company. So such type of transactions are preferential, undervalued, fraudulent, extortionate credit. I'm not going on to each and every section and these transactions. What I'm trying to tell you is that these transactions form part of the resolution plan. Now, it is very important that a clause is there in the resolution plan at the time of acquisition. What had happened in this particular case, Delhi High Court has ruled that these forensic transactions, which otherwise would have come to the company if the company would have gone under liquidation or continued by the resolution professional, will not be survived, because this particular application is now ex officio, because the person who has filed has left the position of resolution professional. Now, there is a very big catch in this particular judgment, and I have seen people misinterpreting it. The catch here is, I've just highlighted the catch. Catch says that there has to be a provision in the resolution plan. So if the resolution plan says that the application for bringing back that money is to be continued by the resolution professional, it will get continued. And the money which is going to come back, it will come back to whom? Whether it will go to the bankers of the erstwhile company or it will come to the new management. Now, again, this particular thing is not there in the law, not defined anywhere, but you can define it in the resolution plan. In the matter of DHFL, I don't remember the figure exactly, but some 30,000 crore or something. Money was being there in these type of transaction. Now NCLAT has remanded back the matter to COC to decide that this money will come to that COC or it will go to new management. So assuming both the situation, if it is going to new management will litigate, it may win, it may lose. So COC can negotiate that, suppose, let's say it's a 10,000 crore transaction. COC may negotiate that you might get 20%, you might get 50%, you might get 100%. So let us come in between. You pay us, let's say, 30% of whatever is coming. So there could be a negotiation between both the parties and a figure can be assigned to these transactions, and the headache of continuing the litigation can be passed on to the new management, because ultimately they will be interested in getting some money. So there could be some formula worked out between the erstwhile creditors or erstwhile financial creditors of the company and the new management. There could be a situation like in the case of DHFL, they have said that the Piramal who had acquired, they will continue these litigation and they will get the money. So you can, I think, structure it in a manner which is win-win situation for both the parties. My suggestion to the bankers, if there are any in the participants, is that because being a banker, it becomes difficult to track these changes. It is better you assign rupees X and get that rupees X and leave those transactions with the new management, because the new management will always be having the books of accounts or the resources to fight out the case. Otherwise, it might become difficult. And those professionals who are insolvency professionals, I would ask them that you can take this assignment, because the law says you can have a provision. If you read the judgment says that you can have a provision. So if whatever person is taking, let's say COC is taking or the new management is taking, you can get an authorization from them in the resolution plan itself that you will represent, because you have ultimately filed the application. You can represent it between different forums and definitely get some money recovered from these transactions. So this is what my view on this particular issue of forensic audit is. And the impact, we all know, one of the case which has reached Supreme Court is that of JP Group, wherein JP Infratech Limited land of 858 acres was given to JP Associates, and Supreme Court has reversed this transaction. So the land mortgage by JP Infra for the benefit of JP Associates, which was a related party, has been reversed. So that is very important, that even our forensic audit report is taken so seriously by Supreme Court that if you are alleging something, definitely it will have repercussion. Initially in this particular matter, it was alleged that it's a fraudulent transaction. However, Supreme Court has held it to be a preferential transaction. They have not adjudicated it as a fraudulent transaction, but definitely a preferential. But the effect is same. It is getting reversed. So that is very important, that the person who is going to buy the JP Infra will get this benefit of these 858 acres of land. And friends, it's not a penny amount. It's a huge amount. It's in the plush area of Delhi NCR. Another important issue which comes is, what is the commercial wisdom of lenders when you are taking over the company, whether every demand of the purchaser can be accepted by the committee of creditors. So, an important case of Tirupati Jute. Now, KL Jute versus Tirupati Jute, this is a very important case because the plan approved by the COC, by the lenders of the resolution applicant was rejected by the NCLT. So normally, in usual course, you will see 95% of the cases, I would say 99% of the cases, the plan approved by the COC pass muster also legally by NCLT. But this is an unusual judgment where plan approved by the COC has not been approved by the NCLT. And also this matter was challenged before NCLT, and they have also confirmed the rejection of the NCLT. Now, what was the reason? Reason was this wise. I was also part of this matter, therefore I am aware about some of the facts. What happened was, when the resolution plan was given by the resolution applicant, he imposed a particular condition in the plan that the land which is leased by the company to some third party, those particular lease should be terminated and the vacant peaceful possession of that land should be given to me. Oh, this is a condition precedent for this resolution plan. So basically, court said, and it was argued by the failed resolution applicant against the successful RA, saying that eviction under a resolution plan cannot be permitted. There are civil courts who have rights under eviction law, and therefore NCLT cannot say that you evict Mr. X and Y and then pass this particular land to the purchaser. Purchaser has to buy it as it is, and he might continue the litigation for eviction, but he cannot impose a condition on the committee of creditors or the financial creditors that you please evict and then pass me on, because then the plan becomes conditional. So the conditional plan is not permitted, and it is a contravention of the laws of eviction which were prevailing in the state, and therefore this plan was held to be non-compliance with the law and rejected by the NCLT. So therefore, each and every condition, if we impose in the plan, it might not pass musters, and therefore we have to be very careful whatever conditions we are putting in the plan are legally valid. Another important case, this is again some of the participants who would think that I had bid, let's say, rupees X, but somebody has taken it for some amount less than X, and why he is getting favored. So in this particular case, what had happened was a famous pharmaceutical company, a group of companies of pharma industry got successfully a company called Unimac Remedies. Their resolution plan was approved by the COC, but when it came before NCLT, the unsuccessful resolution applicant alleged that the payments which are shown is misnomer, and the valuation of XYZ, some assets have not been taken into consideration. The valuation of company is much more, and if given the chance, he is ready to buy. Let's say the company sold at 100 rupees, he is ready to pay 120. Or let's say the other side again offers 120, he is ready to match that offer or bid something more. So the question raised before the court was, in the case of pharma companies, there are intangible assets. There are some rights which have not been valued and considered by the COC or the purchaser, and the unsuccessful resolution applicant brought this to the notice of the court. Court referred it again for valuation to a third valuer, even when the plan was already approved by the COC. And this third valuer argument was challenged before NCLT, and NCLT also confirmed the appointment. They did not interfere with the order. So point here is, suppose we are bidding for some company and we fail that particular bid because somebody else gets successful. But after perusing how he got successful, and we find out that the valuation is more and he has given it at a lesser value, and if given a chance, we could have given more value, then this particular case has to be considered. So valuation, I think, is going to be the next big litigation amongst the buyers, because as we have discussed, this is again a evolving law, and I will say a revolving law also. In the last 6 years, we have seen so many amendments. The concept which we learned at 2015 has changed drastically in 2022. So this is how the law has been changing. So we have to be very sure about the market updates, what is happening in the legal area, so that we can appropriately put a bid when buying a company. Now, again, this is a very interesting case, though argued by me, but failed the successful resolution applicant. So what had happened in this case was the valuation done, let's say it was 100 rupees. The liquidation valuation was 100 rupees. And the offer value for that particular company was 20 rupees. Now there was a difference of, let's say, 80%. So the offer value was less than the liquidation value. Even then COC approved the plan. Reason was, there was an argument that the valuer have valued the company at a higher price, and the bidder who is bidding has demonstrated to the COC that, sir, this is not the actual valuation. Actual valuation is only, let's say, 20 rupees, and I am ready to pay 20 rupees. The lenders agreed to him also. Lenders means COC agreed to it. But NCLT rejected the plan. Now, NCLT said that if the liquidation value is not being fetched in the resolution plan, we will send the company to liquidation. We will not approve the resolution plan because you are giving way below the liquidation value. So again, this is, I would say, something unusual where the approval of the COC has been turned down by NCLT because they have gone by the basic objective of the law, that is maximization of value. In fact, they also went to the extent and changed the resolution professional, saying that that's their view, saying that it is possible it could have fetched more money. But again, I would say it's a controversial judgment. It cannot be taken as a precedent. But yes, we will have to show to the court that if there is a higher difference between liquidation value and the offer value, what can be done? Now, this is again an interesting case and very important for everyone. Personal guarantee, it's always a sticky issue. So suppose you are buying a company, but you require the support of the ex-promoters, the ex-management. What normally happens is that you try to bring them on board. Now, as per IBC, you cannot take the ex-management with you. So for cooperation, you will have to give them some incentive. What normally happens is the person who is going to buy the company, they will say to the ex-promoters that, see, you come and cooperate and we will ask the lenders to discharge your guarantees. So what happens normally is, because they are aware about ins and outs of the company, they have been running the company for years together. So the incentive normally was that you waive the personal guarantees and the promoters will help us in reviving the company. And this was done, and I have just quoted one of the case where we got it approved also. What we did was, we bifurcated the bid amount into two parts. X for the company and Y for the personal guarantees of the promoters. And unanimously, Committee of Creditors also agreed and NCLT also agreed. So therefore, done and dusted that the company has been acquired. However, some of the NCLTs have also taken a view that the personal guarantee cannot be waived through resolution plan, and separately bankers can get into negotiation with the promoters and the resolution applicant if they want to utilize them for the functioning or for XYZ purposes in the company. So this is something that my suggestion is, if you bifurcate for the price, probably it will find muster before the court. And we have successfully done in this case. Another case is recently this one, wherein the subrogation of the guarantees is done and it has been again confirmed by the NCLT. So these two judgments I have just discussed you, that you can also think of this particular issue. People generally say, and I very on a lighter side say, that IBC is BAP of all laws. It's like Bachchan Saab. All heroes are small before Bachchan Saab. Similarly, IBC is an overriding law. And I would say it's a code. It's not a simple act. So it's a very big legislation and it will override all other laws. Therefore, you have to take into consideration which law you want to override. There has to be some conflict. I explained you that example of RERA. If you don't take approval and do something post facto approval of plan, which is contradictory to RERA, it will not find muster, even if the plan is approved. So that is very important that you take into consideration the laws. Now, one of the interesting case, we all are aware that there was a huge cost which came because of the Supreme Court judgment that the spectrum charges has to be paid, which was wrongly calculated by the telecom companies. And we know what happened. Oda Idea got merged. Aircel, Videocon, Reliance Communication, they all went under insolvency. Now the issue which is important here is, suppose I am Jio. This is an imaginary example just for the understanding. Let's say I am Jio. I want to acquire the spectrum which is lying in Reliance Communication Company. So as Jio, if that spectrum gets added in my bounty, I will be able to expand more subscribers. So I'm into the same business. I want to buy this company. This company cannot pay thousands of crores, which have been ordered by the Supreme Court. So this is very important that the Jio is wanting to acquire Reliance Communication so that the underlying asset of the spectrum in Reliance Communication comes to it. Now, understand, Department of Telecommunication has given spectrum to Reliance Communication. Now, if Department of Telecommunication says, I do not want to pass on the spectrum because my charges are not paid, even if as a Jio, I acquire Reliance Communication, I will not be able to use the spectrum because that is the main asset. So if the business is like this, where the complete license is getting disturbed because of non-payment of dues to that governmental authority, even though as per law, IBC says that it will override, operational debt has to be paid nothing, assuming that in the waterfall they are getting nothing, then the authority might say tomorrow that I am not going to continue this particular asset. So this is very tricky situation. If you are going to deal in company having licenses, completely dependent, their business is completely dependent on that license. License is given by maybe a governmental authority like central government, state government, local authority, like mining leases. All these issues will come. And therefore, it is very important that you strike a balance or negotiate with that particular authority. Because tomorrow, if you buy the company and that particular license get terminated, you are left with nothing. Now, some of the learnings from the SRT. So one disclaimer, I was also one of the advocates in the matter. So some of the views may be biased, but some of the learnings which I think are important for the purpose of persons who are buying are that the person who is a resolution professional, he is correct in deciding that Section 29A disqualification. So the person who is going to acquire the company, see, it's a very, very difficult situation that the person who wants to acquire should have the knowledge of the company, but he should not be disqualified to buy that company. Under 29A, he should not be hit. So we all know what happened in the SR Steel first case, where there were two bidders, one Mittal Group and one Numetal. So it was held by Supreme Court that both of them were ineligible, and rightly so, decided by RPN, then confirmed by the court, that Numetal ultimately had some trappings or some beneficiary of the erstwhile of the management who was suspended. And Allen Mittal Group had relationship or related party companies called Uttam Galva and KSS Petro, which were NPA. So a defaulter cannot buy a defaulting company. That's the logic. So if a person is already an NPA or its related party is an NPA, he cannot buy another company in resolution plan. So this is very important. So they had to actually pay 7,000 crore rupees for the debt of KSS Petro and Uttam Galva to get eligible and buy the company. So point I'm trying to make is, if we think that we have some relationship or some connection and this company is going at a better price, please see 29A. You should not be hit by that 29A. And that is very important because this is something very dangerous. If you are disqualified by law, even if you have money, you cannot buy the company under IBC. So this is very important. And I have seen many of the companies after acquisition also, the erstwhile promoters, they come in and they say, no, sir, this person who has bought it is disqualified under 29A. Now, some of the issues with regard to whether if my plan was approved, RP should have confirmed it that it is in compliance with law. So as I told you, some of the examples, that plan is put before COC and RP also examines it. Now see, RP's duty is just of examination, and he cannot say that he confirms the plan, or he cannot say he is giving a legal verdict on the plan. So basically, he is only giving a tentative view. So my view is that even if suppose my plan is having a less bid value, RP cannot reject it and it has to be placed before COC. Secondly, my plan once passed muster through RP and COC, it cannot also happen that NCLT cannot reject it. NCLT can very well reject it on legal grounds. So my suggestion to everybody who wants to acquire a company, think it from the point of view of legal compliance also. Just because COC has approved or RP has approved, it should not contradict some law. I've already given various examples how it can happen. So this is some of the learnings which I think are important. And when you are giving a plan and there are litigations by the company or against the company, the law says that even 1 rupee can be assigned as a litigative value by the RP. But when I am giving the plan, I should consider this as a contingent claim. And I have seen many of the cases wherein specifically this particular clause was not there and litigations are now going on till Supreme Court. So my suggestion to the persons who are buying a company, that if there are litigations wherein maybe a nominal value of 1 rupee is assigned, please make sure when you are buying the company, say all contingent claim, if at all fructify against the company, I will pay this much amount. So our payment towards a class can be fixed. It may not be fixed for each and every member of the class. So if there is a class of operational creditor, if there is a class of financial creditor, please clearly put it that even if there is a litigation, my money cannot exceed to this particular class above this amount. So therefore, basically you are putting an immunity for future litigation, which might come on to the buyer. So this is very important. Again, one of the more difficult situation is then the person who is giving the plan is giving that this much will be distributed to SBI, this much be to BOB, this much be to X bank. So this particular distribution again is only suggestive. As a acquirer, I can only suggest the distribution. Ultimate distribution is the domain of COC, not even the RP. So lenders tomorrow can decide amongst themselves. And this has happened in SRT, where State Bank of India and other banks have got 91% recovery, whereas the Standard Chartered Bank only got merely 2% recovery. So there could be a situation that among COC, the distribution might differ. Now your question could be how it is possible that distribution is different, or how recovery of one bank is different from the other. So what has happened in this particular case is State Bank of India said that I have mortgage on the project assets, whereas Standard Chartered Bank had pledge over the shares. So mortgage of assets and pledge over the shares was different in terms of quality. If I sell the mortgage asset, there is no value of the pledged share. So therefore, there is a disparity. And therefore, it was held that the distribution in accordance with the quality of the assets has to be upheld. And COC is right. It is their domain, what money they want to distribute amongst themselves. So this is very interesting issue. And again, as an acquirer, we should not get into all this. We should just say, as a class, we are paying this much to the secured financial creditor. this much we are paying to unsecured financial creditor, this much we are paying to operational creditor. Now it is for themselves to decide inter alia what they will get. So again, I am saying distribution is always suggestive for the applicant, and it is for the inter alia members to decide, not the domain of acquirer, not the domain of RP, but only the domain of COC. So this is a myth which I normally see across forums. This I have already done. Yes, this is very important. Ineligibility. So many of the times it happens that I am ineligible because of some particular issue at one particular time, but I may be eligible at other point of time. So an interesting case from my experience, a company in 2017 went under insolvency suo motu, thinking that I will revive. But November 17 disqualification came and the promoters could not buy back the company. Company went under liquidation. Now under liquidation, the concept came that I can buy the company, means anybody can buy the company back under scheme of arrangement. So that was an amendment which was brought because of judgments by the court. Now when this scheme of arrangement was allowed to revive back the company, the famous case of Gujarat NRE Coke, where the promoters themselves took the company into IBC, they wanted to revive back, they moved a scheme of arrangement. Because scheme of arrangement was permitted for other companies, they also moved. Matter went till Supreme Court. Supreme Court said, if you are ineligible under 29A, even under liquidation, you cannot move a scheme. So this is very interesting issue that sometimes we might become eligible, sometimes we become ineligible, and again become eligible. So I have got one more case study further than this. So in the case of Gujarat NRE Coke, promoters were debarred because they were disqualified. Now one case came to me where the company became MSME because of amendment in the MSME Act. So the turnover limit and the investment in plant and machinery, those thresholds were changed. Subsequent to their change in the threshold, the persons who were ineligible become eligible. As you know, for MSME, various provisions of 29A are relaxed. Now the question came before the court whether the ineligible person can become eligible because of change of another law, not IBC, MSME Act. So answer is yes. If a person becomes eligible because of change in another law, he can definitely buy the company. And I have just cited the judgment. You can read it at your leisure. It has been confirmed by NCLAT. So this is what broadly happened in this particular matter. Now, another important and sticky issue is with regard to carry forward of losses. And this is something which most of the time chartered accountants are also interested in. So I take a very small example that the company is a trading company, or maybe there are no plant and machinery, or the assets have already been sold by the bank. So as we know that even a clock which is not working, the battery is not working of a clock, what happens? In a day it shows right time, in night it will show right time. For 24 hours, 2 times whatever the time is shown is correct. Similarly, a company which is having no plant and machinery, even then the loss becomes an asset. So the losses in a company is an asset. If I am a profit-making company, I am an acquiring company, so the target company which I am going to acquire, if that is having losses, what will happen is I will end up paying no tax. My profit will get set off from the losses of the company which I am going to acquire. So even if there is no company, it may be a shell company. Shell company means not black money company, but normal company having no assets, but loss is there in the books. I can utilize that loss. So the amendment came in the budget, and probably professionals would be aware that when we want to carry forward the loss, we have to see that the company which we are acquiring, that company's returns are filed. So now some of the cases where I tried to do it, because the returns were not filed, court told me that you go to the court, a respective income tax department, ask them for the delay condonation. So there are two things. If the losses are there in the books and returns, income tax returns are timely filed, then you are eligible for the carry forward of loss. The only thing as an acquiring company you need to consider is when the resolution plan is put up for approval in NCLT, please make sure that the principal commissioner of income tax is made a party to the resolution plan. Number one. Number two, assuming that the returns are not filed, because sometimes promoters run away or are absconding, then the returns must not have been filed of the company which is under insolvency. Then in that particular case, ask for a prayer that the delay in filing the returns should be condoned. So probably this is a planning tool and we can use it for carry forward of losses. Now, this another interesting case came to me that I have acquired a company. But when I want to make the payment to the XYZ creditors, one of the entities got into insolvency and then got into dissolution. So basically, I have acquired a company. I want to pay the creditors, but that creditor also went under insolvency and then it got dissolved. What I did was I found out the shareholders of the dissolved company, caught hold of them, and then made a payment to them. So that is how some complex issues might come in, that if I need to make the payment, I have to pass through maybe 1 or 2 or 3 levels. This is all some unusual experiences which we had. This is one of the case where we got approval from the NCLT for the company. Plan was approved. GST came, NCLT rejected it, that we will not consider. Now see, as I'm not giving you the exact figure, but broadly, let's say in 50 CR, this company was acquired. Now the tax department is coming out with a liability of 40 crores. Now, if we have to pay 40 crores to them after acquisition, what is the use of acquiring? They say we have a legitimate claim, we have this, we have that. NCLAT rejected it on this particular ground that you have come belatedly. Secondly, even assuming they have come on time, they would be an operational creditor. So as an operational creditor, they will get nothing, because in that particular case, even financial creditor did not get full amount. So the point is, even if tax department comes belatedly, they are not going to win the matter. Now, after acquisition, some of the issues which might come in and which we will have to factor in the cost while giving bid is that if there is an investigation pending against the company. So I am buying a company which is maybe a tainted company because of the promoters, erstwhile promoters. There was an investigation, inquiry, inspection, something pending, maybe income tax, maybe GST, maybe company law. You please put a figure to that see, because these inquiries and investigations are there, I will have to pay them. So you negotiate with the lender saying that, see, my bid would be less than the others because they are not considering this investigation issue. Or you can negotiate that, see, this much amount you will have to spend to make that company free from investigation from these authorities. Because as per the amendment, you can only get away for the company on criminal angles, but not civil litigation. So civil litigation, which is regard inquiry investigation with respect to companies, though the liability ultimately will come on the erstwhile management, but the new management will have to cooperate and provide all the documents. So that is an additional cost to the buyers. Please look into this, that there are no such investigation or inspection pending. If pending, please allocate a particular amount so that you get a tentative idea that this much money you have to pay additionally for complying with all those investigations. So I think I have tried to cover whatever little experience I have. Now we can definitely take the queries if there are any. I think presentation would be shared to you all, so that will not be a problem. We can take the queries, ma'am.
Yes.
Yeah. I don't know. You want to answer?
We can answer.
You want to go on?
We can.
What about I am KS Ramesh, insolvency professional.
Yes, sir.
I thought it was a live meeting, so I came to the Federation Chambers.
Okay.
So now if there's a sale of assets in liquidation and a foreign company wants to buy these assets under 32A to D regulation, more or less we call it slump sale only, because there is an opportunity of a power plant with land auction, announced for auction. So if a foreign company has to acquire, FDI is not applicable because purely transfer of assets. So is there any advice you could give to the incoming foreign buyer? A company, maybe a foreign company with Indian shareholders, or anyway, it's a resident outside India under FEMA.
My suggestion, sir, in this particular case would be that the company which is giving money to buy some assets in India, that recently RBI has come with some regulations prohibiting some of the companies who are from a place, maybe neighboring border countries. So that needs to be seen. Secondly, please also get into the loop of this particular buying a person who is an expert on FEMA, so that if there is any approval required, which we may not be aware, it is taken. Assuming that your view is it is not required, please intimate RBI.
But if I am a liquidator and if I get the auction, as a liquidator, am I responsible for that, or
Yes.
it's the responsibility of the incoming foreign buyer?
Sir, my suggestion to always the liquidators is also, please inform the regulators. Because tomorrow anything happens, the liability is crystallized on liquidator. For example, let's say you have sold an asset. You have not collected GST. Assuming you have not collected it. Now GST law says that liquidator would be personally. So my suggestion always to liquidators is, please inform the regulatory authority. Probably they may not respond also. If you intimate them, they will not respond also. No problem. You have done your duty.
So the primary responsibility will be of the acquirer, but liquidator should inform the regulator. So
Yes.
that they inform that. So
Yes.
it's not the duty of the liquidator to, similar to 29A, he doesn't have to verify FEMA, if at all.
Sir, see, in general, compliance of all laws and regulations is the duty of the liquidator. So you will also have to take some legal advice that yes, it is free from any illegal activity. I am not saying that you will have to comply each and everything, but broadly, it's not illegal. That is what you need to take an advice. And I have seen if you have taken an advice, written advice, though it may be your working paper, but then it will help you tomorrow if some litigation comes to defend that, see, I have done it bona fidely.
Thank you.
Welcome, sir.
Earlier in the liquidation matters, the after liquidator used to make an application to the Honorable High Courts, and the Honorable High Court used to they say whether you can go ahead like that, because after liquidator is the in charge at the time, and 434 Companies Act. And because once he wants to make an affiliate has been appointed, affiliate to the Honorable High Courts has been appointed the affiliate of the company. That affiliate used to make an application to the Honorable High Court and get an
Yes,
answer.
because in the erstwhile law, the procedure was you have to go to court every time.
Yeah.
That has been done away in the IBC. In IBC, it is like you are only the person taking a call.
You should take care and caution.
Yes, that is right. In fact, I share my one of the experience. In one of the cases, what happened was we tried for auction. Some 7-8 times the auction failed. Now law says that suppose the auction was done at 50 rupees. It's a private sale. But for doing that, I will have to justify and get an approval from the court.
Oh.
So what I did was I got that 30 rupees bid, put it in the stakeholders committee, discuss with them. They said that yes, because you have already spent 3 years, it is not getting sold. And as per law, if you want to sell it before reserve price, we are ready. You go ahead. We will get some money and we will close the company. We got an approval for rupees 30 by NCLT by an order saying that, see, this is what happened for the last 3 years. SCC are with me. Ultimately, they are the beneficiaries of this money and court permitted us. So I can give the citation of the case also. It's in the case of Asian Natural Resources Limited, and it's a NCLT Indore matter. I will share the judgment also. Citation in my PPT, I will add it.
That's why earlier High Court was conducting the open public auction in the open court itself.
Yes, yes.
Yes. Can I ask, sir, Hitesh?
Yes, sir. Please go ahead, sir.
Yes.
You can switch on
Good
your
afternoon, sir. Singhvi, I have two questions for you.
Please, sir.
One company has gone through this NCLT. The resolution proposal is there, but the creditors are not getting their total amount. Say liabilities, say 100 crore, and they are able to get by, say, realization of value, say 50 crore. 50 crore is still outstanding, but the promoters has got the personal guarantee. So whether COC will be able to get that 50 crore, then again for recovery, they will go to the promoters and ensure that bank guarantee is ensured.
Yes. They
Even
that
if
is a co-extensive liability.
IBC doesn't relieve them from personal guarantee, correct?
Correct, sir. And there is a Supreme Court judgment of Lalit Jain. You can read it. In that section 138 to 142 of Indian Contract Act has been discussed in extenso. It has been held that the liability of the promoters, the personal guarantors, is co-extensive with the liability of the company. So even if company's liability is settled, the deficit amount can always be recovered from the promoters. It has been settled in SR Steel also. Both the cases you can read.
I think Videocon also the same thing.
Videocon, sir, Videocon personal guarantee cases are still going on. I am telling you those cases where it has been confirmed till Supreme Court.
So my point here is then the limited liability company, the concept of limited liability
Goes
company
away. Goes away.
goes away. Am I
Goes
right,
away.
sir?
You are absolutely right. Because of personal guarantee in India, see, I always take this example, and please don't get offensive, that a person who is selling, who is a good businessman, one of the business of selling liquor is still going good, but his airline business has gone bad. you know, but because personal guarantee, recovery has to be done sitting outside India.
I see something looks to be illogical also. No? Concept of limited liability has been curtailed. Am I right, sir?
You are right, sir, because in India, we see defaulters as somebody with a social stigma. Reason
Absolutely.
is this, we
I agree.
always take personal guarantee. Bankers also always take personal guarantee that if company does not pay, we will get it from your assets. In my personal opinion, this is not a global practice. You must have heard about Mr. Trump. He has been bankrupt for 6 times. His 6 entities got bankrupt. Last one in 2009, but he was president of the most powerful country in 2016. So globally, this concept does not work out. That a company goes bankrupt, you make the promoters also bankrupt. That's wrong. But yes,
Absolutely
in India,
wrong.
we
That
have
is what
personal
my
guarantee
point is.
issues.
So we have also taken up and written to the Finnish military, but I think, as you said, something is going beyond their acceptance. Another question, sir. In many of the cases, what happens is NCLT cases are going on, and in general, I would say that operational creditor doesn't get anything. Correct? Correct. So what has happened is the process is NCLT is going on, and then many of the companies are still running. They don't ensure and don't inform the people whether this NCLT is going on and some way company will be taken over or it will go into liquidation. And in that process, people are supplying the material, people are giving the services. Correct. But finally, they find that it is NCLT, and then now the resolution process is there. RP is appointed, and then all operational creditors become, in a very bad situation. What is the course of action for operational creditors, sir, in this situation that company is luring them to supply and after that not making the payments? Is there any solution for that?
Sir, if the company is under IBC, it is the duty that all the then purchase order, supply, everything should be done with the approval of insolvency professional. And it is also the duty of the insolvency professional to inform that vendor that please file your claim before insolvency commencement date in so and so form. And thereafter, this supply you are doing, we will pay during insolvency resolution period. So it is actually a duty casted on the RP that he has to inform them if he is taking continuous supply. If he is not done it,
there is a difference here. What has happened is the process was going on, and RP, the process was going on in the court. Okay.
What process, sir? Admission process or post-admission?
Admission process only. Once RP is appointed, then is clear picture. RP is not appointed, and then promoter was objecting to that. No, it is not required. I am, talking to my banks to resolve this NPA and will make the payment. During that process, the company was luring the people and taking the material. And finally, after a week or so, then RPO was appointed and the court has rejected this conciliation plan. So is there any solution for that?
So then I will give you my example. See, I am appearing as a lawyer for the promoters to defend the company. Okay. And I normally charge on per appearance basis. So my payment was outstanding and company got admitted. What should I do? Whether I would be paid fee? I will be also operational creditor only. So the law is same for everybody.
Correct.
So even when I am into the knowledge, I am only fighting the case. My fee also gets bad debts.
Okay, so so operational credit.
So this was on the lighter side, but there is no recourse.
No, absolutely. I got your point. I got the message too also. Thank you very much, Singh.
Thank you, sir.
I think what people can do is that they have to follow the NCLT site also as to how many cases are pending against them. And yes, one thing is we don't know how much amount is there. The petition amounts we cannot see unless until we apply to IA and get the copies. We don't get to know that, at least so these details should be made public at the time of making the applications.
Once it is admitted, they are publishing it, but before that publication,
before admission. Because there are companies, sir, 10 cases are being filed against the same company, cases going on. So at least they should know.
वो market में मालूम हो जाता है भाई.
Sir, Ritesh, there would be one problem. See, if I file against Reliance Industries, if I file against Tata Chemicals, because there could be dispute with the vendors. And nowadays it's a fashion. You file insolvency, you will get payment instantaneously. If a company is big. So I have seen good companies, good liquidity, and the cases are being reported in all media just to defame them also. So again, those companies will come to you and say, sir, why are you publishing my name? So then again, it's a two-way sword.
True, sir.
Yeah, sir, good afternoon, sir. This is Priyansh Biani here.
Yes, sir, please.
Sir, one question, sir. Sir, one of our financial creditor has gone into liquidation and they have a loan from bank and the bankers are the secured creditors. The case is, sir, the bank has a mortgage of a property which is of a sister concern of the insolvent person. Like it's a third party mortgage, sir. So we are proposing for the resolution plan. Now, sir, when we propose for the resolution plan, all the assets of the insolvent person will be transferred to us. But we have a
not insolvent person, sir.
Only the
company.
Yes, sir. Insolvent company. Sorry. Yeah, the insolvent company. And now, sir, that the third party mortgage with the bank, which the bank holds, will that also come to us?
No, it will not come to you. As I told you, they are two separate contracts. As per the judgment of Lalit Jain, they are separate contracts, contract 1 and contract 2. So contract 1, which is between the bank and the corporate debtor, only that is getting resolved. The contract 2 is always open for the deficit amount and bank can always proceed for that mortgage. Secondly, even otherwise, if you are acquiring a company, you are also into the business of this particular vertical, whatever you are acquiring. You are not a NBFC. You are not an asset reconstruction company. So you even otherwise cannot buy a mortgage.
Okay, so sir, the balance properties which the insolvent company has kept with the bank, that one will get released from the bank when we repay.
No, that's what I'm saying. No. Let us take an example. Total liability is 100 rupees of the CD which you are buying. Yes, let's say you are paying 60 rupees. For the balance 40 rupees, they will enforce the other securities.
Okay, but we are proposing that whatever the assets the bank is holding as a security, that has to be cleared from the charges because we are paying to the bank the best possible value.
That argument already rejected in SR Steel, sir, long back. Long back it has been rejected. When you are marrying, you have to marry only one woman. Her sister cannot be your wife also. Okay, understood? So, it will be only one way, one company at a time. sister concerns, if they want to settle, get into a settlement for that particular company separately. This resolution plan cannot go beyond the corporate debtor. However, I have given you one example where the guarantees of this corporate debtors promoters can be assigned a specific value and that can be settled. So, meaning thereby in our case, that 40 rupees deficit which is there, and you think that those mortgage properties is, let's say, going to fetch 20 rupees. So that Y company, which is a third company, can always come for a proposal to settle for that 40 rupees deficit at 20 rupees. But that will not form part of your resolution plan. Your resolution plan will only talk about assets of the corporate debtor, not third party. And there is a specific particular orders on this issue. In fact, one of my only argued case, NCLT Delhi, ASIS Plywood Limited. If you read the second or third last order of the resolution plan approval, therein court asked us to amend this and said that only assets of the corporate debtor can be included in the resolution plan. You cannot go beyond to sister parties, third parties, or maybe another company.
So only we can free this insolvent company's mortgage property from the bank and take it in our name.
Correct. Sir, you are only taking corporate debtor.
Yes, sir.
Kindly
Yes.
understand. You are not concerned with what mortgage pledge lien he is having as a creditor with any third party. You are only buying CD. Instead of XYZ promoter, you will become the promoter. All the assets control will come to you. Only that balance sheet. You think it from the side of balance sheet, then you will not get confused.
Okay, sir. Thank you, sir.
Welcome.
There are two questions in the chat box.
Yes, sir. Please.
Carry forward of losses. Are carry forward losses allowed to be set off? What if the accounts of the previous year are not audited and no returns have been filed?
Okay. So, in my view, first, carry forward of losses can be set off. There is no problem. I have told you one rider, when the plan is getting approved, please make Principal Commissioner Income Tax as a party to the resolution plan application filed in the NCLT. Normally what happens is acquiring company does not file the application. It is the RP who files the application. So that is a precaution which needs to be taken. Secondly, if the accounts are not filed, I have given you one plausible remedy, though still I do not have a particular order on that effect, that you can ask for condonation of delay in filing of return. So that condonation of delay can be granted only by Income Tax Department, but you can make a request in your resolution plan to the NCLT. Though somebody told me that there is one order of NCLT Chandigarh, but I am not yet able to locate, wherein NCLT has asked the CBDT to allow them to condone the delay of filing of return. Because section 119 subsection 2, I suppose, in Income Tax Act empowers delay to be condoned by the CBDT in case returns are not filed on the due date. If they are considered to be on due date because of condonation allowed, then automatically you are entitled to the losses. I think somebody is asking another question.
Yes, sir. At what stage do we ask for condonation, sir? Because
the resolution plan itself, sir.
In the sense, in the resolution plan,
Yes.
obviously I would seek for set off of losses. That's one question that anyway I would be mentioning there. And seeking condonation of delay is one of the points that I mentioned in the resolution plan. Is that how it goes?
Yes. See, asking for condonation of delay is something over and above which is not required in the law. Law says, as per section 79 amendment, you have to specifically ask for Principal Commissioner of Income Tax to be a party. Law does not say that you ask for condonation of delay. But if you want to take a benefit, it's a concession which you can ask and which NCLT can do it. NCLT will do it. It's a matter of argument, but you can always request NCLT. So I have told you that you can always request by way of reliefs and concession. So that clause, normally reliefs and concession, is a standard clause where all you can ask for. Let's say the returns were not filed with the ROC. ROC always levies a late fee. So you can ask for that late fee waiver. suppose in some cases I have seen that there is a reduction of share capital. So you have to follow that complete process of Companies Act. So that relief you can ask in resolution plan that the procedure of filing of XYZ forms for reduction of share capital should be deemed to be approved when the plan is approved by the NCLT. So such type of release and concession can always be sought for, and there are few judgments wherein NCLTs have permitted them also.
Okay. Thank you, sir.
One more question from Suresh Jain sir has raised his hand.
Yes, sir.
Suresh Jain sir, please go ahead, sir. Now, one more question is from Murli Chodawa. Are income tax and other statutory dues covered under the creditors, which would be covered under the RP?
Sir, I am not able to get the question. Can you, sir?
Are
Is
income
it in the
tax-
chat box, sir?
Yes, it's in the chat box. The last question, sir. Last but not.
Okay. Are income tax and other statutory dues covered under the creditors, which could be covered under the resolution? Yes.
Yes.
Income tax and other statutory dues are operational creditors only. As per the IBC, section 53, if you talk about the waterfall, these all are considered to be operational creditors. And there are various judgments. If you want to read specifically, then read the Ghanshyam Mishra judgment of Supreme Court. It will clarify.
Yes, Gaurav.
Yes. Yes, sir.
I think with this we have come to the end of the questions, sir. On the questions, one more question has come from Josil. Can resolution applicant propose different payments for methods for members of the same class of creditors?
I think this I have already answered in my presentation. I would just reiterate. RA proposes payment to a class of creditors. It does not get into the class of creditors. So suppose financial creditor is a class. Let's say State Bank of India, Punjab National Bank, Bank of Baroda are members. So you will not get into that. What payment will be given to those three creditors? Because that is something inter alia to be decided by the COC. That is what SR Steel Supreme Court judgment says. So you only can suggest on the basis of claim that probably this would be the payment. In the class, whatever has to be done is to be done by the COC. It is bound by their commercial wisdom. I gave you the example of State Bank of India and Standard Chartered Bank in case of SR Steel. State Bank of India got 91% of their outstanding amount, but Standard Chartered just got 2%. So that is an inter alia distribution among COC members. You need not get into that.
One more question from Gaurav Joshi. My query is with respect to aspect of tax remission post approval of resolution plan. Since there would be huge liability that would be written off, therefore there could be a risk of huge tax liability upon successful resolution applicant on account of liability remission. How to deal with such a situation?
Okay, so I remember Hyderabad High Court only a good order with respect to Leo edible oils, which we normally quote. And then there is a Monet Spat order of Supreme Court with respect to income tax. So Leo edible oil was with respect to sales tax in the insolvency only. And then in the insolvency matter of Monet Spat of, I think, PCIT versus Monet Spat is the citation for Supreme Court, wherein it has held that tax liability will be zeroed. And the person who is going to buy it is going to buy it for fresh slate. So carry. So when you are talking about liability, tax liability will not arise, because let's say assume a situation where let's say 1,000 crore was the outstanding liability. I have, let's say, bought it for 200 crores. Now 800 crores, if you are saying, by going by your argument, if I am writing back 800 crores, then 30% is 240 crores. Then there will be never a resolution plan which is workable. Because my payment to buy the company cannot be the tax which I have to pay after buying the company. That is what the logic of SR Steel is, that the Hydra should not pop the head on the resolution applicant. So in my view, that particular accounting treatment which we normally follow, writing back, will not apply in case of companies acquired under IBC. Sorry. I think there is one more query.
2-3 queries have come, sir.
Can I ask, sir?
Yes, sir.
You're reading from there, or can I ask you, sir?
You can ask, sir. Please.
Sir, there is one very important point that we wanted to know, especially with regard to the resolution plans. The conditional resolution plans that we keep talking about is a very thin line, sir, because sometimes certain things are absolutely required for me to take over another company. There is one particular company where the land is leased, and the lease is given by one of the relatives of the promoter. I know for sure that if my resolution plan is eventually accepted, I'm not sure whether that relative will extend the lease or not. So it is natural for me to request in the resolution plan for continuation of a lease. But if that is construed to be a condition precedent, then my entire opportunity is lost. So I really don't know how to handle such cases.
Nipunji, you are muted, sir. Please unmute.
Oh, sorry. This is what actually I discussed in the JK Jute matter. When the person was buying the company, he said that I want that eviction. That is not permitted. Neither you can ask for lease of third party to be continued. So you may ask, you may request, but then since that particular person is not a party, it is no guarantee that you will get the lease. So my suggestion to you is you can always negotiate with the lessor independently of your resolution plan. You can ask him, you can request him, and such a similar order has been passed in case of Garden Silk Mills. So if you read the judgment of approval of plan of Garden Silk Mills, the way to come to the factory was with promoters, which was not in the name of corporate debtor. They requested them and the promoters agreed. So you can definitely request the promoters. But if it is a third party, then it's a difficult situation, because till date, I have not seen any order where third parties have agreed in the resolution plan. So in my view, you will have to negotiate it independently.
Thank you, sir.
This may be useful to all the applicants. When you are suggesting that the resolution applicant should offer to a class of creditors, normal clash is between secured and financial creditors. Sorry, unsecured. So will it be different class? Because these are very routine question that comes up to many people between secured and unsecured financial creditors.
So I think I can try to answer it, though there is a tricky situation in this also. Section 53. So if we read section 53, I'll just read the specific provision. Section 53, 1B, which says the following debt shall rank equally between and among the following. So first clause is worker dues, so that we all know. Second is debt owed to secured creditor. In the event such secured creditor has relinquished security in the manner set out in section 52. Now the language used is secured creditor and not financial creditor. Normally people confuse secured creditor with financial creditor. I have seen cases where even an operational creditor can be a secured creditor. So therefore, when we are planning something, we have to plan it very specifically. You are going to pay to the secured creditor class as covered under section 53B2. So you are just paying to the secured creditor class. Now, amongst the class, what happens? Don't get into that, because that is not your domain. And if you read SR Steel Supreme Court judgment, the second judgment in which ArcelorMittal was confirmed as resolution applicant, there is one para where this particular argument has been taken that yes, in amongst the class, we will not get into it. That's the commercial wisdom of COC. I hope, sir, I am clear.
Yeah, very clear.
Three general questions are there, sir. What is the liability of RP or IRP to get the accounts audited till liquidation order is in place?
Yes. So IRP and RP, whoever is the in charge, whether it is a liquidator also, needs to comply with all the laws in force. So suppose it is a listed company, he will have to make the filings. He will have to update them of any sensitive information to the stock exchange. If there is an ROC filing, he will have to do it. Now the question comes that because of technical difficulties, sometimes you will have to file it through the digital signature of the promoters. This difficulty, though, to the some extent, it has been settled by that particular notification or I think circular of Ministry of Corporate Affairs, where they say that for the purpose of filing, RP would be treated as CEO of the company. So I think that filing issue has been taken care. But in some cases, like in case of financial statements, my personal view is, and I have seen in many of the companies, that there will be a joint signature of the RP and the directors, because the powers of the directors are suspended. And normally the confusion is the directors are suspended. No, their duties and obligations towards the company continue. There will be a joint signature. If they do not cooperate, definitely we can move an application to NCLT, and NCLT will direct them to cooperate and sign the financial statement or whatever filing has to be done. But you will have to move an application to court if they are not cooperating.
One last question from Mr. Murli, sir. Mr. Murli, sir, you can unmute yourself.
Sorry, sir, I did not get the query, sir. Sorry.
Yeah. Mr. Murli has raised his hand, sir, so he can ask his question.
Yes, yes.
Good afternoon, Mr. Singhvi. This is Murli Krishnamurthy, Chartered Accountant from Hyderabad.
Hello, sir.
Sir, I have a typical question. Is the NCLT order binding on the lower authorities, which include the income tax department and the other statutory departments?
Yes, sir. It is binding on all, whether it is third party, whether it is government, whether it is any other stakeholders. It is binding, sir. The language has been, if you see the language, it is binding on all. It is there in the approval of resolution plan. And you can refer to judgment of Supreme Court in Ghanshyam Mishra. So yeah, Ghanshyam Mishra is the famous case, sir.
Yes, sir. I am now in the tribunal, in the income tax tribunal in Hyderabad, in a couple of cases. Now I have cited this Ghanshyam Mishra's case, but then the tribunal is not very appreciative about this whole process. They still want to give a chance to the department to reopen the assessment proceedings, notwithstanding the fact that the companies under NCLT order has already been served.
Then, sir, I think there are 2 or 3 ITAT judgments which you can refer. One is from NCLT Ahmedabad itself. I am forgetting the name of the company completely, but it was some Oasis something private limited. So that one judgment of ITAT Ahmedabad you can rely upon. There is recently, I think, one case of ITAT Indore also, which is also on the similar lines. So you can refer to ITAT judgments and see if tribunal takes a differing view, you will have to go to High Court. There is no other option. But yes, there are some judgments which will help you.
Yeah, thank you so much, sir. Most obliged.
Welcome, sir.
Sir, I think we have come to the end of the session. Some general comments are there that why is that some of the NCLT listed companies stock prices are traded that higher, and why IBC doesn't apply to government.
Okay.
So with this, we have come to the end of the question answer session, and I request our advisor, yes, Raju sir, for his remarks on the topic, sir.
Remarks.
Closing remarks, sir, please.
No, because I have, we are hearing for last 2 hours. He is a very, very minutely, detailedly, and also with all the case law, and also particularly because he is well acquainted with the day-to-day, and he is we are very thankful to him because you have enlightened, especially in IBC, how to take over the company and how to go ahead. But now taking over the insolvency company is a very risky proposition. And what we have seen is you have to verify, and also the resolution plan, everything you have to verify. You have to put it all these things in the resolution plan. And if you don't resolution plan, other fellow will say, no, that is not there. That's why it's very, because my land friend has very, very minutely, very, very detailed way he has explained, and it has benefited all the persons who are participants, especially IBC. Is the legislation which everybody is looking for the IBC. Now, if you see, I think Singhvi, out of 50 or 60 cases listed in NCLT, all 58 cases are IBC only. And we are seeing every day, all 60 cases, company cases are not being listed. Whereas IBC, about 58 cases are IBC only. That means it has got so much prominence, so much actually. We are very, very thankful to you for very detailed way you explained to them. It will definitely help and assist, and also these people, those who have participated, they will be benefit by your last 2 hours you have given that one. They will be benefited.
Thank you so much, sir. Thank you very much, FTCCI, for calling me, especially Mittalji. Thank you for calling me, and I would love to be there in physical form also whenever the situation permits. Thank you very much. Thank you, ma'am. Thank you, sir.
Before I propose a formal vote of thanks, I would request our V.S. Raju sir, past president of FTCCI and advisor to the corporate law committee, to present a memento, sir, and which will be sent to Nipun Singh ji subsequently. You can show it, sir. Please.
Naresh.
Yes.
Sir, we will send it to by post. Because this is a webinar, we can't present, so just we want to show that presentation to you. And definitely we will send it to you, sir.
Thank you, ma'am. Thank you.
Thank you.
Yes, sir. So now we propose the vote of thanks. Sir, as you all know, sir, this is not a simple topic, sir. This requires a complex, and though IBC code, the objective is to ensure that the resolution happens, and the final resolution doesn't happen unless until the proper resolution application comes into and resolution plan is it comes into force. But at the same time, it comes with various complexities, and this is where the entire issue was. And Nipunji, you have taken the session in very minute detail, and the expectations was very dealt with, because we know that you are a master for case law, sir. Once it comes to case laws, everything is there at your fingertips. So that's the beauty with you, sir, and very nicely taken the subject. And we thank on behalf of FTCCI for to our speaker Nipun Singh ji for giving us valuable time and taking the subject. And I thank all the committee members, corporate law committee members, and especially our advisor to the committee member V.S. Raju, our secretary Veena madam, and Ramesh sir. Thank you for coming there physically and showing the support. So I thank everyone for attending the program, for all the participants. Thank you, one and all.
Thank you. Thank you.
Thank you, sir.
Thank you, one and all. Thank you.
Thank you, sir.